This is our Forex blog for December 1st, 2011. And like we do most days, we want to buy the strongest currencies versus the weakest ones, and we want to sell the weakest ones versus the strong. Our currency meter measures every currency versus every other one, the dollar versus the yen, euro, pound, Swiss, CAD, Australian, and New Zealand. And we measure it on 5 different factors. 3 of them measure whether it's going up or down, the percentage of currencies going up and down. One of them measures the bar-by-bar statistical intensity of that trend. Did it go up today 200% more than it normally does on average? That will reflect an extreme high strength or weakness. And the other one's more of an intermediate time frame trend, which helps even out the trends throughout the day. Underneath the real-time trend, we have the daily trend, the weekly trend, and monthly trend. So the dollar has, because of the weakness starting yesterday, the dollar has a slight upward trends on the daily and weekly. The yen is weak on all time frames. The Australian strong pretty much on all time frames, so is in New Zealand. And the euro, for the most part, has real-time daily strength. The weekly trends, slightly down, the monthly trends up. So if the euro is showing incredible strength today, like it is, as you can see, even last night, lots of strength, very little weakness. That strength is likely to continue. It does. Very little weakness. Previous momentum, since it's to the upside, is likely to continue, and it does. And that's basically how you use the currency meter. You focus on, the best days are where you have currencies like the yen that are weak on all time frames. So when it went weak at 4, it's likely to stay weak for an hour to 3 hours because all the time frames are down. So let's look at this at 4. The euro was strong throughout the day, so coming up to 4, you could be looking for euro-yen sells. At 4 o'clock, the Australian was weak, so you probably wouldn't have looked for this one. The pound before 4 o'clock was starting to show some strength. The daily trend and weekly trends down, so it's not the best one. So it's probably the euro-yen is one of the best ones to be looking to buy at 4 o'clock, coming up to 4. Here's the euro-yen. And notice coming up to 4, other euro pairs were showing signs of strength before, but maybe the yen was stronger than the euro. But 4 o'clock is right here, breaks from underneath above the hourly. That's usually a good place to buy. If you miss that trade, you have a nice little flag pattern right here, which oftentimes is a high probability trade and also tends to give you a pretty decent pip size or a pip movement. And you can see it went from 104.50 all the way up to the whole number here. Now, one of the better ways of getting into trades is using our range charts. Here's our 6 pips per bar range chart, and you can see on here it broke out from underneath above the hourly, pulled back. On a range chart, when you see a currency go from below to above the hourly and then find support at the hourly, it's very high probability you can get into this trade a little bit earlier here at 48 versus maybe 54 for 6 pips higher probability. Here's your first profit target. I would have exited half the trade here, for maybe only 10 or 12 pips. But usually with all this resistance, it's going to stall, and then our trailing stop got you out of the rest up here at 84. But very high probability trade using the range chart. And anytime you see weakness like this, and the longer time frame trend is down, followed by a little bit of strength, and visually half the strength that there was weakness, usually that previous weakness will return. So usually give it about a half an hour to an hour and a half. Somewhere around 6:30 right here, you could be looking for the yen to get weak again. And so, which currency is was strongest right before that? The euro was consistently strong. The Australian had an hour of strength, hour of weakness. I would have passed on that one. I would say the New Zealand. From about 4, it started to have a little bit of strength. From 4:30 to 5:30 has quite a bit more. And then it has very mild weakness. The daily, weekly, monthly trend is all up on this. So, it's pretty safe to assume that you can find a good buy in the New Zealand yen coming up to, what time is that there? 6:30. Let's, I realized my mic was in the wrong spot. Let's look at the New Zealand yen chart. Now, strong New Zealand weak yen. Now, the only downside of this trade, looking at the chart, is that we have a major Fibonacci area here that acted as resistance here and here. I spend 30 to 45 minutes every night doing Fibonacci analysis work on multiple time frames. Sometimes there's 4 different fibs on there that I plot and put those levels up on our website, and the software automatically downloads it and displays it on the chart here. So without having looked at a longer term, hourly, 4-hour chart or daily chart to come up and do the fib analysis yourself, it shows up right here. So it's usually not a good idea to buy right in front of a major resistance. But if you did, that's the only thing that probably led to this not giving you a nice 20 to 30 pip win. When the currency goes up and it stalls out right here, and you can see it had quite a bit of strength, and then as it gets less and less right here, you can see the strength disappeared. So, at least you had a chance to get out of this trade with a few measly pips versus, letting your stop get you hit. If you always want to put your stop 1 or 2 pips underneath the swing low when you get into these trades. And usually once they go 5 or 10 pips, I move my stop in half. This is one of those things where it looks like it's going to really work. The daily, weekly, monthly trends up, but you have major resistance here that acted as, huge amount of selling all day long. It's also a good idea to look at a daily or longer term chart too. One of the best parts about our software is that we have 20 different layers that you can showcase charts on. If you bring up, let's say, put period D in here, it'll bring up a daily chart. And so let's zoom out on this. All right, so this is kind of, near the lows over the last, few months. It has also had 1, 2, 3, 4 days up in a row. And typically, after a currency has 3 or more days up in a row, it tends to run out of steam. So by looking at a longer term chart, let me just show you the layers function. By showing and hiding your charts like this, even those of you who have small laptop monitors can really have a lot of charts up and running, and you can look at them when you need to. You can have every single currency that you watch daily chart up on one layer, or you can just have one chart up with daily view, and then just type in the symbol that you want to look at the time. So this wasn't a downtrend. It's had, and notice from this move right here, see the Fibonacci area? It's a 50% Fibonacci area that, again, I draw on the charts for you so that you know that this is an area that's likely to have resistance. Now, if it breaks above that area, it's likely to go up, but the next area it's going to stall at is up here at 61.68. That's almost 90 pips away. It has really good room to run if it had finally broken above that area, but it didn't. One of the reasons it didn't break above that area is because it went up 4 days in a row straight. It's much more likely to have at least a 38% pullback before continuing up. It's more likely to come down to 39.31 than explode through that level there. And that's where context comes into view. We always do these simple currency meter type of lessons for our blog, but in our regular class we teach multiple time frame trading, how to look at longer term charts to really get a feel for the most likely action each currency is going to do. Is it going to go up a little bit and very likely stall out at the highs because it's been up 4 days in a row? What's the longer term trend? Anytime you have a currency that over the last few months has been going down, and then for the last week and a half, 2 weeks has been going up, maybe it's been up 4 days in a row, it's very likely to stall out. You can still buy it the next day, but it's much more likely to stall out and reverse, like you can see here with the New Zealand yen. And that's one of the things that you should keep in mind when you look at currency meter. Yes, this was set up for a likely up move because all the time frames lined up. However, because it's been up 4 days in a row, for this particular currency, maybe not all the New Zealand currencies have been up 4 days in a row, but that's one of the things you have to be aware of.